Welcome back to another video of our series From Zero to LBO. In this video, we will introduce scenarios to model revenue development for our dynamic three-statement model and hence the DCF and LBO model. The purpose of this video is to incorporate a structure to easily manipulate key parameters of our model. In our case, we will solely focus on revenue development at this stage. However, it is of course feasible to include costs, expenses, and other parameters in the scenario analysis. So let's get started. The data we utilize for our scenarios is primarily the key indicator of Twitter's business model. That's at least what Twitter said in the quarterly and annual reports. It's MDAU, monetizable daily active usage or users. The metric shows how many users accessed or logged into Twitter daily, which was measured over a period of a quarter year and then averaged. Twitter has adapted the MDAU definition over the past years, which affected the metric. And by the way, was also criticized by Elon Musk in the wake of his takeover, as we will see later. However, we simply focus on the figures published in the Q1 and Q2 2022 press releases. Based on the historic values we collected from the quarterly releases, we can see if there is a certain trend within revenue and MDAU development. And apparently there is a steady growth, although with some seasonal ups and downs. So what we did here is we calculated average MDAUs per year based on the quarterly data. The yearly MDAU figures will be utilized to calculate revenue per MDAU per year, as you will see in a second in the model spreadsheet. In addition, we also calculated here revenue per MDAU per quarter and also added some growth rates to have some historic benchmarks when going into the scenario definition. So in the model spreadsheet or worksheet, we defined a separate revenue schedule where we model all our revenue streams, starting with revenue from advertising services. Here we simply divide annual revenue, which we collected from the 10Ks, by the just calculated revenue or average MDAU per year to arrive at revenue per MDAU per year. In that, we build a simple price quantity matrix, which we can now use as the basis for our future planning. In addition, we add a line for data licensing and other revenue, as well as a separate subscription revenue stream. The data licensing and other revenue is generated through the sale of search, historical, and real-time data of tweets and their content, as well as a mobile advertising exchange, which was sold as per January 2022, the MOPUB transaction. Subscription revenue is based on the introduction of a fee for account verification and other soon-to-be implemented features like tweet edit. The fee is at $7.99 per month, and we assume that the full impact will be in 2023, although the service is already in place in late 2022. So, as a first guess to whom this fee might apply, we'll look at another document, which is the response of Twitter to verified counterclaims of Elon Musk. Here in paragraph 140, Elon Musk's deal team argued that the quarterly MDAOs only a small fraction like 7% is accounting for approximately 50% of quarterly revenue. We use these 7% as our best guess for the Twitter subscription fee. Please note that this video is solely focusing on the technical part of building revenue scenarios or cases. We will analyze the parameters and choose some real-life examples in the following video. So based on that, we structure our cases in the KPI and assumption worksheet. We build 3 different cases: best, base, and the worst case, and include the variables subject to change accordingly. In our case, we focus on change in average MDAO, change in revenue per MDAO, change in data licensing, and other. All 3 are planned using a yearly change rate. Furthermore, we include the monthly subscription fee of $8 and a share of subscribers who are using this monthly subscription in percent of total MDAO, and here we will find the 7% for our best case. In our base case, we for the moment simply divide our assumptions by 2 and take half the growth rates and half the share. And for worst case, we just use these dummy numbers. As I said, we will have a deep dive on this in later videos. So to select the different cases, we introduce a simple choose function here in this section of the spreadsheet, which can be chosen using this switch to jump between the cases, and these figures are then ultimately linked to the respective line items in the revenue schedules in the model and LBO worksheet. In addition, we also link the chosen scenario to the sheet header that the current scenario setting is visible throughout the workbook, and you can briefly check in which case you're currently working in. In that, we conclude the video for today. I hope you got some insights in how to build a brief and simple scenario or case analysis into your model. So thank you very much for your time. In case you are interested in the Excel file and the comprehensive step-by-step guide outlining each step we just briefly showed you, just drop us an email to the address in the video description. In our next video, we will analyze our model using the Elon Musk takeover as a showcase and try to see how our model performs using real-world data So I'm looking forward talking to you soon. Bye bye.